Hey, this is David Miller with the Miller Group of Keller Williams Realty. I'm here to help you get real estate smart. All right, so the new real estate stats just came out for September, and I wanted to interpret that data for you and let you know where we are heading. All right, so let's take a look at inventory first. I always like to start there. So inventory went up slightly, a couple houses versus last month. And so we're at 11,560 homes. So that's the highest inventory we've had since September of 2015. This is up 71% versus last year. So last year, remember, inventory was low, but all 2024 has been scaling up because the interest rates were so high. And so I like to look at what's being added to the market, what's being taken away. So if we look at new listings were about the same as last year. However, they were down about 11% versus September. Now that's expected because that's seasonality. August was the end of the summer months. As we get into September, people are focused on the first 30 days of school to get their kids in the activities. So listings always do drop during this time of the year. Now, if we look at closings were down 15% versus September, which is seasonality. However, they were 12% lower than the same time last year. So less houses closed. Now you might be thinking,
well, I heard the interest rates did drop in September. Why did they not show up?
Well, the reason being is that it takes 30 days to close on properties. So we're going to see those closings for October. Let's go ahead and talk about the interest rates. The average interest rate was 5.9%. That's down from 6.1% from the previous month. Now, if you compare that to last year it was it's 19% lower than what it was in 2023. So that's substantial. So that obviously made homes more affordable. And even though we didn't see the closings this month, I guarantee that we're going to see those extra closings next month. So what's going on with interest rates right now? Well, they dropped down to that 5.9. Now they're coming back up. Remember, this has very little to do with the federal government does because the interest rates for real estate is based on the 10-year bond. And those usually moved before. So before the rate cut, they had already dropped. The day of the rate cut, actually, they went up a little bit. And then now that new data came out that more people were employed or got employment than was expected, then it's gone up to about 6.3, 6.4 right now. If you remember, I was expecting if the rates kept on bumping between 6.8 and 7.2, that we're probably going to slip into a buyer's market by the end of the year. So we're going to have to really keep an eye on the interest rates because that is dictating affordability and that's bringing the buyers into the market or taking them out of the market. So that is the main thing. So how is this affecting pricing? Well, pricing is down for the second month in a row, about 1% versus September. However, if you compare it to last year, it's up about 3%. So pricing went up and then now it's sort of gone down. And as we get more sales for October, I expect it next month to actually go up here. Days on market, how long is it taking to sell a house? That's from when you put it on the market until it goes under contract. Well, it's at 58 days. That's the average in Metro Orlando. That's pretty much the same what it was in September. However, I will tell you that it's 42% higher than what it was last year. So last year it was at this time it was 41 days on average to get your house under contract. So that's jumped up quite a bit. What does that mean for you as a buyer? Well, there's a lot more homes to look at right now than there was ever before, which is awesome. You also have more leverage than you had before. I will tell you this, if a house is priced right, in good shape, it's going to get multiple offers. But if it's not priced right, it's going to sit on the market. And when it sits on the market, it gives you leverage as a buyer. So if you need any help from our team, myself, my wife, or my daughter, or the rest of us here, we would love to have an opportunity to help you out. And I hope that you are now real estate smart.